Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. Well, I'm gonna start it a little bit late because I was finishing up a chart school, kind of interesting one, on an interesting stock. And hopefully, I'll try to show it to you on the show. It's regarding Palantir, kind of interesting. I don't really have any slides, but the market was up and then it pulled back, and I don't know. We're kind of in one of those zones. So let me just use the live charts here and show you kind of where we're at. Let's look at the Qs first. QQQ is the symbol for the Nasdaq 100 ETF, the bigger one called the QQQ. And basically that has been performing. Kind of look at the 60-minute chart here. It went up in the beginning of the day, and then it pulled back, and now it's sort of holding in here at about that 327, 329 level. The key level on the Qs, I really believe, is about this 315 level here, and of course we're above that, so that's looking pretty decent. It seems to have recovered somewhat, from midday. It pulled up very quickly and then pulled back. Kind of want to show you the chart for Tesla, and of course we're going to be seeing Tesla go through earnings here in just about 2 more days. So it's going to be a big one. I think I do believe that we're hopefully going to see some good news here. There's a lot of expectation out there, but I just kind of want to show you the daily chart on that, and that kind of gives you an idea of sort of where we're at. We've been in this like consolidation here. This is the daily chart that I'm showing you right now. We've sort of been in this consolidation. Oops, there we go. And we've pulled up and we pulled above this very key 884.49 level. Then we pulled back. We're currently at 879.80. Oh, we're at 880 now. Basically, the key on the Tesla, I believe, there is resistance right at about 880. So what can we do? Well, if you're not in the stock right now, I'd hold on a little bit. But if you want to come into the stock, I think it's a good opportunity, and that will be after the earnings. Because it may pull back, but I do think that 880 is a very key level for Tesla, and I think it may move higher than that. You always want to try to go buy as it's moving to a higher high, and I do think that may be the case. That may be the case for Tesla after the earnings in 2 days. So we'll see how it comes out. Let's look at the Spider. This is one of the world's largest ETFs. It is basically, it contains most of the Fortune 500 companies, and it's a very, very many people have their entire net worth in this. So this is a very, very important one. It did pull back to that 10-day line right here, but as you can see, it. Click, there we go. Okay, so there we go. It did pull back to that 10-day line, but then it's pushed up from that. So it's at 384, which is very good. The key level really on this, of course, on the Spider is this 358.75. It's definitely making a new high, as you can see, and that is good. So we didn't really have, this is a flat base pattern here for the Spider, but generally, if you look at this in the overall market, we are above the consolidation. So for right now, it looks pretty good on the Spider, even though we have had a little bit of a pullback. Part of the issue, of course, was that many of the stocks, we thought it was going to be more of a rotation than it was, and so it seems like it's back to the future, back to the tech stocks. They seem to be working really well. So, go figure. It's always something with that. So, without further ado, let's take a look at some of the questions. And thanks. This is from TikTok. Thanks so much for hanging out there. All right. Hello, sir. What do you think about CRNT? CRNT? I don't know that. Let's look at it. CRNT. And this is Caragon Networks Limited. Not familiar with this issue, but it looks as if it's a penny stock. It's $5.44, up 0.38% today. It does have a relative strength of 92. That's looking good. Its earnings are basically in 14 days. What do we do with this thing? Let's look at the weekly. Yeah, it seems like it's pulling to a new high level. There was a consolidation on it at $2.94. You know what? Here's the thing about a stock like this, and I'll just be honest with you. I realize that a lot of people, when they're starting out, they are very interested in buying the lower expensive stocks, and because you can get more shares. But I really recommend not doing this because they tend to be very volatile, and you can lose your whole investment in a day. With a stock like that. So here's the thing with Kerrigan. I think that basically what you ought to do on this one is probably take a pass on it and wait until it moves above about $10 a share, because I think that that's going to give you probably a better overall a better overall look. So that's what I would recommend on this one. I wouldn't recommend going into this one. It's just too thin, and I think it might not be as good as you like it. So I would take a pass on this one. All right. Good morning, Jim. Tesla and Apple exit plan due to earnings. Well, Mr. Singh, here's the thing. Normally I would be bailing on Tesla. I would bail right before the earnings, because typically that's a good time. With Tesla, I'm going to take a wait see attitude. I did sell a call, which kind of gives me some protection. So with Tesla, because of where I bought it, because I bought it in stages, I'm going to be holding through earnings on that one. Now with Apple, unfortunately, I am not still in it. I got shaken out of Apple. I definitely think that Apple may have somewhere to go, but and it is pulling up today. But it is the problem that I see right now with Apple, and again, it's up $3.90, which is great, is the fact that we are so close to earnings. We're only 2 days away. Now, I'm personally going to hold for Tesla earnings, but I'm not in Apple currently. I'm going to see kind of what Apple does. If Apple performs well, I may jump back into it. And the reason I think so is because fundamentally, Apple is a great company, makes great products, and has many really good things going for it. On the short term, I mean, if I'm not in a position typically within about a week of earnings, I just don't do anything. And that's just sort of how I typically will play it. So that's kind of my take on it. But I'm going to be holding with Tesla, and probably I'm going to be moving I'm going to be moving I'm not going to be moving into Apple before earnings, but I may, if it does well, then then I'm probably in it. Here we go. Thanks, Mr. Singh, for this. CCIV, I'm out with 40% profit. Excellent. That is, hey, we're getting a 40% profit on anything in this day and age is very good. So that's that's kind of good. Now, I don't typically buy blank check companies. I just don't. But maybe that's because I'm a little bit conservative. I think you've done tremendously. You get, if you could do this and you can get in and you could just push your stop loss up, and then when it pulls back, you're out. I think you're really ahead of it. This is tremendous. Now, was I in the stock? Absolutely not. Unfortunately, I just don't do SPACs right now because I haven't quite figured out the proper way to play them. So that's kind of my take on them. Not saying that they're not good. It's just that, they typically move very quickly. But if you're in a stock like that, and you push your stop loss up, that can be very, very profitable. So, okay. Question. I have a question from TikTok, and this is about GameStop. And, this is interesting because, I think a lot of, the investors that haven't been around quite as long don't really understand what in the heck is going on with GameStop. Okay, so look at this stock. I mean, it's just taken off for the moon. This is the weekly chart. And let's look at the daily chart of this. Let me tell you what this is. As you can see, it went really from 40 all the way to 150. Getting in at this point would be highly dangerous. And the reason is because even though it went all the way up here today, As you can see, it's already pulled back. Here's what's happening with GameStop. GameStop is a short squeeze, okay? And what happens is a lot of people, this is one of the most shorted stocks out there. Almost 35% of its float is shorted. Now, even today, 3.3 days, or about 35%, 35% of their stock is short. Can you believe that? The reason that's so significant is, think of it. The way you short a stock, of course, is you borrow the stock and then you sell it back and then you hope for it to go down. Well, guess what? With this many people shorting it, even though they're not doing anything, it's going up. So there's going to be a lot of people that are going to get killed on this one because it is heavily shorted. So when you're starting to short a stock, you got to be really careful about this short interest. It's 3.3 days. That's at the normal volume, or about 35% of the entire float of the stock. So what's happening with GameStop is that we have what they call a short squeeze, and that's exactly what's happening with GameStop. My advice out there is that don't step in this one, because you might be getting into something that you don't want to do here. The thing about the thing about a company that's gone through a short stop is that you will see it pull back. Now, great stocks have done this. Tesla had a short squeeze as well, and you can make money on short squeeze, but you got to get in before that short squeeze. If you believe in a stock and it's moving up, it may be a good idea to get into the stock and then start pushing your stop loss up, and then when it pulls back, and usually short squeeze do, then you'll be sold out at a higher price. But what's happening with GameStop right now is there's a short squeeze going on, and you don't want to get into the stock because it's going to pull back very, very hard. That's just sort of how that's a classic short squeeze. All right. Thanks, James. Neo, let's take a look at Neo. Neo's been pulling back. I got shaken out of GM today too. So it seems as if, again, it always pays to buy quality because Tesla's going up and the other ones, not so much. Here we go. Let's take a look at the chart for Neo. And I'm going to go to the weekly chart first. You can see there's a pullback here, a little bit of a pullback today. Let's look at the daily to see kind of what's the situation with this. Well, it seems like it's just kind of stuck right at this neckline. 5720 is a cup base, second stage, and it's a very nice base, but it's just right in this buy zone here. So the question is, what's going on? Well, I think that this probably will go up eventually, but what's going to happen is the weak hands have to be shaken out. Now, what do I mean by the weak hands? Well, here's the thing: in any stock, what causes a stock to go up is, everybody thinks, well, they've got great prospects and things are going on and everything is great, and that may be true, but the thing that really causes stocks to go up is for the strong hands, typically the funds, their unwillingness to sell at a lower price. And you see, unfortunately, as it goes above this buy point, well, there's all kinds of sellers, so it pushes it down again. So I think the weak hands, the quote unquote weak hands, have to be washed out of this stock. So this possibly can run, but you're going to have to wait. And I think that you're probably going to have to wait for it. It'll probably pull back below the buy point again and then retest, and then hopefully it'll reverse higher. Where I would be looking to buy it would be a reversal off this 21-day exponential right here. Okay. And and I'm going to set an alert right at that level, because I do think that is a very good area. If it pulls back to that, it may bounce and go higher. So that's kind of the thing with Neo. The problem with Neo is that it has good fund sponsorship for a Chinese stock, but there's a lot of retail investors in there. And by definition, retail investors are what they call weak hands. So that's what I think is going on. Mr. Singh, good time to take the profits on GM? Absolutely. I think you should buy. I think you should take profits. I definitely did. I got pulled back. Mine pulled back. I took the profits, and I wish it had gone further, but I think there'll be another opportunity for GM. I really believe it. And if you got good profits in it, that's the way to go. So let's take a look at GM really quickly. And it did pull back a little bit today, along with Neo. in that very, very exciting automobile manufacturers group. Okay, so here's the weekly. And as you can see, we went above that and then we pulled right back down. This may be a reversal, but it might not be a bad time to sell. Yeah, okay. As you can see, it's pulled right to the 10-day line, and it may pull back as far as the 50-day line. If you've got profits here, probably a good idea to take them, and then see what happens. Let's see if it continues to on down and then bounces. It probably will bounce. I believe, because I do think it's going higher, but I think it's going to bounce at this 21-day line. So not a bad place to take profits. Absolutely good idea. Possibly take profits now. See if it bounces at that 21-day line. And if it does, hey, buy it again. And just rinse and repeat, rinse and repeat, rinse and repeat. I have a question from Shaha Budding 047. That's the handle. What do you think about OEG? Let's look at OEG. Okay, OEG. And that's Orbital Energy Group acquires and develops companies that create a diversified energy infrastructure services platform. I have no idea what that means. I have no idea what that means. It's not a SPAC, though. It looks like they really have earnings. So that's interesting. Let's look at the weekly chart first to see if there's anything. Yeah, okay. So we have all of a sudden something happened in September of 2020, and then all of a sudden it just started moving the right way. Before it wasn't doing anything right, and then all of a sudden, boom, it just started doing great. 99 relative strength. Look at that. Obviously, it must have been off of earnings. Yeah, it was. Okay, so they've had two really strong quarters. Look at that. Their sales are up 24% in the June 2020 quarter, and the September 2020 quarter up 124%. So that's looking very good. It's a relatively thin stock. There's only 15 funds that are carrying it, so only 7%. So this has a lot of retail investors in it, and this might make it. It may be almost ready, but I don't know if it is. 6 out of 9. That's a minimum for me. And it does have 15 funds, but they are dropping. Here's the thing I would say about this stock. At $7.95, it's not bad, but you don't really, I think you want to wait on this one until after. Let's look at the monthly. Yeah, okay. So where do we want to buy this? Well, we want to buy this when it hits a higher high, and that's going to be right here. So we want to wait until it's over $10 a share to possibly buy it. So let's watch this one right now and see if we can get a price higher than $10 a share. And then once it's above $10 a share and it can hold that number, that's where we want to start possibly looking to buy it, because it has some good characteristics. But right now, it doesn't have enough funds in it, and it's a little bit too cheap. I wouldn't buy this one. That's my take on it. Thanks, Matt. Datadog, this is a favorite. This is a good one. It's had a little bit, it's a little bit spiky. But if you're careful on this one, you can make money in IPOs like this. It's got an 84 relative strength. I'm showing you the weekly chart here. I'm showing you the monthly chart. So it's basically been in existence about a year, about a year and a half, and we have a relative strength of 84. Currently, it's up $10. Look at that. Let's look at the weekly then. Let's now look at the weekly to kind of see. Yeah, okay. So we broke it out of this. We do have this cup with handle base at 111.49, and we're at 108. So we're right below the pivot here. Okay, let's look at it. Okay, here's the thing. Can you buy it at this level? Well, you know what? This isn't a bad level to buy it at. This is almost a perfect cup with handle. And it looks as if we're forming another handle here. This is the kind of odd thing about cup with handle base pattern. You have the cup, and then you have the handle, and sometimes you can have another handle before it gets ready to take off. Now, the thing, what causes it to move up like this? Well, typically, when the weak hands are done selling, then it will move up. So I still think that we have some strength in the hands here. Yeah, we do. We have some strength there. But we do have this 111.49. Here's what I would do on this one, and you're probably not going to like to hear me on this one. I would say a buy stop limit order for about right here, about 118.13. So what I would do on this one, I don't think its time is ready yet to buy it, but I do think if you had a if you had a buy stop limit order, and I'm going to just put this in here. This is going to be for Datadog. GDOG is the symbol. I'm going to say basically it's going to be the buy stop limit order, and I'm going to look at that possibly at 111.49 plus 10 cents, giving us basically 111.59. So that's kind of where I'm looking. Possibly, if I was looking to put in a stop loss on this one, I would be looking to do it right about this level here of this line I've drawn up, because I do think that is going to make a new high. So what do I think right now? I think it's unfortunate, but you got to wait on this one. This got a relative strength here of 84, which is excellent. Very nice trend line on the 200-day, if you could look at that. So that's very good. It's also trading above the 40-day, loving that. There is a little bit of an issue here, though. The 10-day currently is below the 21-day. I don't know if you can see this. So we still need a little bit more strength on this. If this thing moves beyond 111.49, that's the cup with handle buy point. If it moves beyond that, plus 10 cents, I think it might be a good potential buy for you. But I would wait on this one. Wait a little bit, and just watch list. So I'm going to put So basically, this is a watch list here, stock. But again, we want to wait until it moves above that buy point at 118.13. That's where we. I'm sorry, 111.59. So that's really where we want to be at, 111.59. So what I'm going to do here is I'm going to set a little. I'm going to draw a line here right there, and then I'm going to set a. Oops. Let's see if I can do it. I want to know exactly when it's crossed that line. So I'm going to set an alarm there on that, and I'm going to set it at 111.49, and that's the buy point. So that's what I'm going to do there on that. So that's a watch list, and thanks for the question. It's a great stock. It's got very nice support, and but I think you want to wait for it to go a little bit higher before you do that. So let's go here, see if there's from TikTok. Oops, wait a minute. We have a question here. Good question. A lot of people are saying CCIV is gold. What's your opinion? Well, I don't know if it's gold. Remember, all that glitters is not gold. I think that's a famous saying. I don't know. Let's look at CCIV. That's okay. So this is a SPAC, another SPAC. Here's the thing, and I sound like a broken record. Boy, I sound really negative. I'm not negative on SPACs. I just unless I know a lot more about them, I don't like to get into them. And the reason is I want to see kind of what they're going to be investing in. That's very important to me, because a SPAC is just basically a blank check, and then they find a company that they want to take public very quickly, and that's a great thing. But I just want to know what that company is. I want to know what the management is. There's a lot of things I want to know. I want to know the technicals, but I also want to kind of know, what they're selling. I want to know what they're selling. So here's the thing I would say on that. And I know that a lot of people have done well in SPACs, but I think it's time possibly to maybe wait for this thing. Wait a little bit on this one. Don't get out in front of your skis, as they always say. So don't get out in front of your skis on this one. Here's the thing. There's always opportunities in the market. Always remember that. There's always opportunities in the market. If the market's going up or the market's going down, it doesn't matter. There's opportunities. So the most important thing is don't chase deals. Don't chase deals, because it's like a streetcar. There's going to be another one right along. So the most important thing is to to develop watch lists of things that are possibly going to make moves that are potentially good, and then do it that way. So that's kind of my little soapbox there for CCIV. It might be very good, but who knows. Okay, so this is a great question, Zihan. Very, very good. Why GME is raised so much and then returned back? This is a great question. What you are seeing with GameStop, and by the way, they're in Grapevine, Texas, which is in the Dallas area, GME. It isn't that the company is just doing so great and everybody is going to GameStop and getting those new things. That has nothing to do with it. This has to do with what they call a short squeeze. And this is a classic short squeeze. I'm looking at the weekly here. What's happening here is that many, many people decided that this stock probably was going to go down. So what they did was they borrowed shares and then they sold them. This is called shorting. And what happened is that people will do this until they get a margin call. The margin call is that you don't have enough security. The value of the stock is such, it's gone up to the point where you have to cover your shorts. And that's exactly what's happening here. This is a classic short squeeze. As you can see, the current at the current short interest, 35% of the stock from GameStop is held short, meaning that people have borrowed it and sold it. So that's why it's moving up so quickly. Now, what happens when you get a short squeeze is that people have to buy it, and that's what causes the spike. But as soon as they've bought it, it then starts falling. Ouch. Look at that. Terrible. So my guess is it's going to be right back down here to right about 48, and I suspect that's going to happen within a few days. That would be my guess. And that is a classic short squeeze. So thank you for that question. That's a great, great question. It's always something you want to look at when you're buying a speculative stock, because highly speculative stocks tend to have high levels of short interest. And this short interest is quoted either in days and in percent. The more, if a stock has more than about a 20% short interest, then it has the potential of zooming up like that and then pulling way back in a short squeeze. That's like sort of an unwind of those positions. So that's kind of the deal. All right, so let's look at Kian. Thank you so much for that. Thank you for let's see if Fastly has a cup with handle. And Fastly has been, Fastly had a situation this summer where it did incredibly well, and then before earnings they lost TikTok. That's big account, and when they lost them, it was in after hours they made the announcement, and the thing fell out of the sky. So that's all. There's another one you always want to have your stop losses in there. So let's look at the weekly. Typically, you want to look for the patterns not on the daily charts but on the weekly charts. There is a pattern on it, but it's a consolidation pattern, not a cup with handle. The reason it isn't a cup with handle is it's just not wide enough. That's the main issue here. This needs to be, about at least 9 weeks wide. And I don't think it's quite that. I don't think it's quite wide enough. So this isn't really a cup with handle. It pulls back a little bit too deep, and it's too wide. So it looks like a cup with handle. It definitely does. But unfortunately, this is not. No, this is this is based on a consolidation. The last actual format, the actual base on this one, was way back in the July timeframe, and the top of the neckline is at 117.79. This is the actual last buy point on it. So it is not a cup with handle. It kind of looks like one, but it's not one yet. Now, can you buy it at this level? Well, actually, that's probably not a bad place. And the reason it isn't is because it's moved beyond this key level here, this 107.93. Now, why is it important that it does that? Well, typically, you want to buy a stock as it's moving higher. That's why I always like to use the buy stop limit order, because as it moves higher, that's when it's bought, not before. So it's definitely moved, and it has very good volume. If you'll notice on this chart, there's this red line, And that on the daily chart is a 40-day line. That means this is the 40-day average of essential volume. So anytime, and this is an exponential scale. So if it moves beyond that, very convincingly, like it did here, like it just did at that level, then that is potentially a place that you could buy it if it's moving to a new higher high. And interestingly enough, if you look at this chart, it's very interesting. It moved right up to it and then it stopped. So there still were weak hands that hadn't finished selling out. So the question is, can it hold above? If it can hold above this 107.93, you might want to be able, you might buy it there. You might buy it at that level. So that is Fastly, but no, unfortunately, I don't think it is a cup with handle. I think it's a consolidation. So it kind of fakes you out sometimes. It's just sort of hard to tell. And believe me, it's a little bit subjective on this. It's a little bit subjective. Sometimes it's not quite. It's not quite easy to figure out what it is. But the last formation on Fastly was about in the June timeframe, and it was a consolidation base. All right. So, hey Jim, what is your thought on home? And you're in beautiful Orlando, which is a very nice place. Let's look at home group, and let's take a look to see kind of what we got here. First, I'm going to flip over to the weekly chart. And, this is very, very nice. We just have pulled above a interesting consolidation base. Not the greatest base in the world, but 23.92 was the buy point. We're at 25.07. Chew, excuse me. Excuse me. Sorry about that. I probably should have muted myself. So we've pulled up and then we've pulled back. Let's look at the daily. It looks as if, okay. So we have some resistance right here. Basically, even though it says that this is the buy point, 22.93, 23.92, I believe really is, because that's kind of where it's gone. So yeah, and of course it's pulled right above that pivot. So could you buy it at this point? You know what? I think that it's pulled back. If it moves above, if it moves above about 25, then I think you could possibly buy this one. There was a lot of action here. There's a little Easter egg, which means that it was the highest volume since this base pattern. So that's significant. So that's picking up in terms of the base pattern. Let's look at the checklist. 8 out of 9, that's pretty excellent. The fund ownership is good too, 293, and it's increasing. So that's very strong. Let's look at the industry rank. It's 19 out of 197. Definitely should be on your list. Why? Because the better the sector, the more you're going to see investment into it. So I really like this at all. Everything I like about it, and basically it's a home and decor shop. And I guess, I think this is, I don't know if this is the Dallas company. Yeah, it is Plano, right up the road. Okay. I thought it sounded familiar. I'm not a huge fan of retail, only because I tend to move more towards industrials and that kind of thing. But, I definitely think this is a good one. I mean, I think this is a good one. Here's the thing. It has a 99 relative strength. I think you could buy it at this level. I would prefer, though, of course, that you bought it at this level, which is about 34. But, the thing is, we're within 15% of its all-time high. So I'm liking that. So could you buy this one? Well, let's take a look at the smell test. Okay, it's up on sales. That's very good. Increasing fund ownership, and it's 94% fund owned. It has positive cash flow. Wow. And it has, look at that return on equity. That is stellar. 6%. That is very, very good. And it's in some of the best markets, because I know the Dallas market for furniture actually is, believe it or not, probably one of the best in the country. That's Nebraska Furniture Mart, the biggest furniture store in the world, has moved. Has moved in. Oh, I have a question here from Mervin. Let's take the call. Hey, Mervin, you're on the air. Can I answer a stock question for you? Oops. Well, I guess, Mervin, we have lost the connection for from Irvin. So I'm sorry about that. See if I can. Yep, there we go. Oh, I think we're still trying to. Yeah, let me see if I can. Let me see if I can make that go away. Yeah, there we go. There, it's go away now. I had the volume up on my phone, and I hadn't canceled out the phone, so that's kind of what happened there for the for the thing. Okay, let's see. Have you heard of StoreDot, a fast battery charge company? What's your opinion? Well, you know what? I haven't heard of them, but I have heard of Blink Charging, and I do have some shares in Blink. So let's look at Blink. Let's kind of look at Blink in that kind of area. I do think this is going to be a good area because I do think that, more and more people are going to be having cars and they're going to need to charge them. And not everyone is going to have a big spot at home to do it. So this might be a good place. Let's look at Blink. I do like Blink because they have 27,000 locations. I think it's 27,000. They're one of the leaders. And I've been in Blink essentially since the summer, and it's done fairly well. It's up today. 54, 45, 80, 84. Now it pulled up and then it met some resistance right here at about 60. And then it kind of pulled back, but it's still in the 21-day exponential, and it's up 3.34% today. So pretty good. We have nice sales increasing. It's a small stock. I mean, there's only 34 funds that are currently in Blink Charging. So where, can you get into this thing? Well, let's look. This is not necessarily really good. It does seem like if you wanted to buy it, I would buy it if it pulled below this level here, 43.85, and then it reversed. And that's exactly what it did today. So can you really buy at this level? Well, you might be able to. Let's see if put this on the watch list, see how it does. If it pulls back to that 21-day line, and that 21-day line is right here. So I'm going to set an alert on that. I'm going to set an alert on that 21-day line at 43. And the reason, $43. There we go. And I'm going to turn that alert on. And then why I'm going to do that is because if it pulls back to that line and reverses, then I might be able to buy some more Blink Charging. But for StoreDot, I think that you might want to consider Blink BLNK instead, just because I know this company better, and I think it has, I don't know necessarily better prospects, but it has more locations, and that's an important thing. All right, so let's look from Alex. Alex says, thoughts on SWBI. And let's look at SWBI. See what we got there. Smith & Wesson. And, with the more, with the, with all the things going on out there, people really do like Smith & Wesson. I'd be cautious there, though, because, typically when there's a change in administration, and it's not to the liking, the NRA is basically going to be moving out of, interestingly enough, the NRA is moving out of New York. It had been originally, can you believe it? It was originally chartered in New York, and now it's going to move to Texas. A lot of things are moving to Texas, actually. But in terms of Smith & Wesson, I don't know. It looks like it's pulling back to the 40-day line. It looks like it's pulling back there. Let's look at the weekly to see. There's a buy point on a cup, stage 2 cup at 22.40. I think with Smith & Wesson, you probably want to wait. You probably want to wait on that one. I'm gonna say, basically, for the SWBI, the buy point is basically this amount here. Let me get the exact number, and that's 22.40. It is 22.40. So let's put that up. Yeah, the Smith & Wesson buy point is 22.40. So we're currently not there. We're currently below that. We're currently right at this level. At this level here, so we're well below the buy point on this one. I think you really have to wait on this one until it moves above this point here, this buy point at at 2240. So I think that's really where you want to look at. Let's look at the checklist. 6 out of 9, that's acceptable. And the ownership on funds is good. 316, that's increasing. That's very good. 48 out of 197. So the industry rank is very good. And so it looks good. And it also has a very strong relative strength at 83. Also, the last 2 quarters have been very good. Look at that. The sales have been up almost 120% in the October time frame, and in the July, these are the last 2 quarters. The quarter ending July is up 141. So they're definitely selling a lot, but I think you want to wait until it moves above the buy point there, and the buy point is 2240. So that's my take on Smith & Wesson. Wait for it to move a little bit higher before you buy it, and then if it moves above that 2240 on strong volume, I think you might have a winner there. So that's kind of my choice on my rant on that. Let's look at SDC. Well, let's look at Rocket Mortgage first. That's RKT. I think that Rocket might be benefiting from some higher interest rates. And I say, well, that's weird. Why would you say that, Jim? Well, the problem with the rates is that they've been so low that banks are afraid to lend. Why? Because there's not a lot of margin if there's a mistake. So I think with the rates going up, I think you're going to see possibly more business, actually, because a lot of people are going to they're going to hurry up and refinance, or if they haven't already. No, but that said, I don't like the chart. Unfortunately, the chart for Rocket Mortgage is just going down. Ouch. And the relative strength rating, not so hot. It does have increasing fund ownership, though. That is a good sign. Increasing fund ownership, but terrible relative strength. I hate to say that. We have a decent checklist, 7 out of 9, so that's good. But we just have, it's just not looking good. The sector is 154 rank out of 197. So I don't really think we want to be in Rocket. I don't even think we want to watch this. I'm sorry about that. But I don't think we want to be in Rocket. Let's see if we get better love from SDC. SDC. Let's look at that one. And that's Smile Direct. And of course, they do a lot of direct advertising on television. At least I see them because I'm up kind of sometimes late. I can't go to sleep, and I'm seeing that Smile Direct stuff. But I am not really that psyched on it. They've had lower sales. Their sales are not going up. And this is everything in a growth stock. You got to have that. I tell you, it's funny because, they don't give a whole lot of love if your sales are moving down. Unfortunately, they have been. The relative strength is not that good either. It's only a 55. I like to see at least an 80. Let's look at the checklist. Okay. It is 6 out of 9, so that's passable, but I don't like that relative strength. And out of the checklist items, I really am a very big believer in that relative strength. I like to see stocks. I like to invest in stocks that are outperforming the whole market. And that's, and for a long time. That's one of the reasons why, I'm such a Tesla bull, because it has been for so long. The question is, hey, wait a minute. We've got a call from Mervyn Price. Hold on a second. Hi, Mervyn. We are on the air.
Am I really? I didn't realize I was on the air.
You are. You're on there. Do you have any stock questions that you'd like to ask?
No, I have no stock questions at the moment. How's Tesla doing?
Very, very good. I'll tell you what, let me give you a call back in about 25 minutes.
That would be wonderful. Thank you very much. Great show, Jim, by the way.
Thanks. Yeah, there's one of our people that's calling in, and glad to hear from them, actually. So, by the way, if you ever need to ask a question that you want to, leave a message for me, super easy to do. Just area code 214-233-5087. So, Smile Direct, I think that's another one that you probably want to avoid as well. So, I'm sorry, I'm 0 for 2 on that. I'm 0 for 2 on that. Let's look at Twitter. Thanks, Said. Twitter and Square. Let's look at Twitter. With this political stuff, Twitter has been There's been a little bit of issues. TWTR. I haven't owned this in a while. It's been a few months since I've owned this. It's pulled, unfortunately, below that 40-day line. I don't really like to see that. As you can see, it tried to make a breakout here. I mean, on a cup handle, a cup without handle, at a 52.53. 52.53 level, but it unfortunately did not make it, and it's pulled back, and it's below the 40-day line. So let's look at the it looks like it may have bounced. It still has a relatively weak relative strength at 57, and it does have the 21-day line. Looks like it's about ready to drop below the 40-day. It looks like who knows, but it does look like Twitter is starting to break down. It does look like it's starting to break down. It does not have a good checklist, 44%. That's not really a great checklist, unfortunately. The ownership, it is still really good. 1526 funds in it. 1526 funds in it. Very good. Industry, well, it's 47 out of 197, so that's looking pretty good. Here's the thing I think with Twitter. I think you got to take a wait, see attitude on this one. This might recover very well. It's it's overall, if you look at the weekly chart, it still is on this very nice run here. So definitely not ready to count it out. But it looks as if it's starting to see some pressure. We definitely have a lot of selling going on here. We have earnings in 15 days. There has been some recovery when it bounced below the 40-day line, so it might be reversing. But here's the thing with Twitter. I just don't think you want to be in it. I think they may be in a situation where a lot of people abandon the platform, and that seems to be happening. That's one of the things about the internet is that when there's an alternative, people leave, and they leave fast. So I think you might want to be super careful when it comes to Twitter, because but now Square is a different story. These are the two Dorsey companies. I do think that Square has better legs because it's much more sticky with the individual merchants. So there's been some pressure on Twitter. The fact that but I think they're going to avoid a lot of that. The thing about Square I really like is that it has those increasing sales numbers, which are so good. It also has a relative strength of 93, which is much better than Twitter, by the way. It also has a 100% checklist. Can't beat that. So can you buy this one? Well, I think that if you're looking at between Twitter and Square, you want to look at Square because Square is just better. 93 relative strength, very, very good. It looks as if, even though it's pulled back $6.26 today, let's see if it reverses off of this 40-day line. If it does, you might have a buy there. And of course, that level is 216.44. So we're just really right at the bounce. So if this thing holds up tomorrow, you might want to consider this one because this has got a stellar checklist. And I just think it's out of the two, it's better. So is there really a buy point? Well, not really. The last real true buy point was way back here on a first stage cup at 83.20. It's currently at 216.64. So it's really extended above that. So I would recommend on this one probably not to buy it right now. Let's see if it moves higher above the 40-day line. Then you could possibly buy it at that level. But it's very extended, so you might want to look to see if you could find something that was just breaking out. And not not at that level. That's what I would say for Twitter. I think you definitely with Twitter you've got to you got to put it on the back burner. With Square, I think you could buy it, but you definitely want to wait to see if it reverses higher from this 216 level. The question is, can it hold the 40-day line? It's below the 40-day line right now, so I think you want to wait and see on this one. So it's kind of a wait and see for both. Fortunately. Hey Harris, thank you for the email. The comment. Sold Palantir for a solid profit. Would be a good time to buy back it. Fantastic. Well, great. I'm glad you made a profit on this. I definitely think that you might be able to buy it back again, because Palantir, I do think, from all that I can see on the charts, it appeals. It appears. It also appeals to me, but it appears that it is being accumulated by funds. So let's see if I'm right or not. There's a little blue dot here, which I always like to see. That's that means it's a breaking out today kind of thing. It broke out and then it pulled back, but now it's starting to pull back up again. Oh, that's fantastic. So where could you buy this? Well, ultimately, the ultimate place to have bought it would have been 35. Okay, right here at this level at 35. But it's now above that. Could you buy it at this level? You know what? You could buy it at this level, but let's see if it pulls back. It's probably going to consolidate a little bit and pull back, but let's look at the checklist. 7 out of 9. Wow, that's really good. And the ownership, look at that, 106 funds, and it's just increasing. The only thing, there is some issues here. The Computer Enterprise Software Group is 115 out of 197. So that is a little bit low. We don't like seeing that. But all in all, I think this is a quality stock. Where can you buy this? Well, I think you're probably going to have to wait to see if there's a consolidation above this 33.50 buy point. You might have to wait. It may. Let's see where it's going to consolidate. Here's the thing. I think it's probably going to go higher based on the fact that we have these two very strong volume days. So here and we're above the, and we're definitely above the neckline at 33.50. So is there really a place to buy this? Unfortunately, you're going to have to wait. It's terrible to say that. You're going to probably have to wait for a consolidation. I think there will be. The question is, where is it going to be? I don't know, but right now the weak hands have been sort of, they've been taken out. I'll be honest with you on this. They've definitely been taken out, and so, I don't know if you can, you can get back in it at this level. So, that's sort of the thing that I have to say on this particular one. So let's see if I can. I'm actually, what I'm trying to do is I'm trying to show you a little. No, it didn't. Okay. All right. Well, I guess okay. Oh, no, that's the intro. Okay. Huh? Okay. Well, I guess it didn't. It didn't. Huh. Okay. Well. Okay. Well, let's see where that one is. I'm looking for a short video that I made here, and I don't know if I have it. Oh, well, I'm looking on the desktop. I hope I saved that. I spent all this time making it, and then it probably didn't save it right. Wow, I think that it might be the case. Oh well. Okay, c'est la vie. C'est la vie. Hopefully I have it, because it's a nice little play on Palantir. I did a covered call play on Palantir that that I would like to show you, because I think it's good. I did that this morning, and hopefully I'll have it out by tonight. If you want to see that, I definitely I definitely put it on YouTube, and of course I'd appreciate it if you subscribe to the YouTube channel at youtube.com/DallasTradingFlor. Really appreciate on that. And then I should have it on there. It's a covered call play on Palantir, and that is, I don't know if that's the exact title or not, but that is the title. All right, Ramon Full 100, I guess it is. Don't get it. BTC is up 5%, but RIDE is down 7%. Well, they don't. There's not a with Bitcoin. There's no central Bitcoin authority really. There's a number of different ways to play it. RIDE blockchain isn't really Bitcoin. It's really what it is it's the blockchain technology. Now there was, with the Biden administration coming in, there were some sellers in Asia that sold a lot of their Bitcoin, and that caused the GBTC, of course, to drop significantly. And I actually got stopped out. I made a profit, but I got stopped out of it. But there are some issues going on in the world. I don't know if you saw this in the news, but apparently in Iran, everybody and their brother is trying to mine Bitcoin, and so it's causing the electrical grid in Tehran to go down. That's not funny, but it is kind of funny because I don't know. It's just I don't know. But let's take a look at the GBTC. This is sort of the proxy that I use for for Bitcoin. And as you can see, it did this is a classic blow off top. This is why you want to use. This is why you really want to use those stop losses, because it went up, and had you been pushing your stop loss up like I do, and then it pulled back, of course it would have sold you out, and you would have been disappointed. But then if it went like this, then you would have been less disappointed. There is a little bit of selling going on right now. Here's the thing: if the GBTC bounces off of this level here, which I believe, let's come and see if I can. Yeah, there we go. Which is right there, then, and bounces off there. I think that you can buy it again at that level. What I'm going to do is I'm going to set an alert for that level, because I do think that is a good area. See, it's currently pulling back. It pulled up. It tried to get support here at the 21-day exponential. This is the green line here, but it looks like it may fall below that. And with this relative strength line, this is that blue line. It pulled down, and then it did sort of pull up there, as you can see. But then it didn't quite have enough juice, and it didn't quite make it back up to the 21-day line. It went up above it and it fell. So we don't have support anymore at the 21 days. So the question is, the next stop on the elevator is probably the 40-day line, and that's why I'm putting an alert there. It's still got extremely strong relative strength at 97. So here's the thing on Bitcoin. Wait for it to drop a little bit. Here's why. This is one of the reasons why I like to play the GBTC, because I think it's a little bit easier, and it's an exchange traded fund. So that's kind of my thoughts on that. Right now, Bitcoin got a little bit ahead of itself, and I don't think it's the end of Bitcoin, but things don't go up in a straight line. They go up and then they pull back and so forth. So that may be an issue with them. So okay, so let's see. This is probably the last question for. Let me see. This is probably the last question for TikTok. So let's see if I can get that. There was a question on TikTok, and thoughts on GILT? Not familiar with GILT, but let's look at it. GILT. And that is, satellite network. Interesting. $12. Okay. Well, again, we might have a situation where we have a short squeeze. Let's take a look first. No. Oh, yeah. Yeah. Okay. Okay. Yeah. We have a short squeeze situation here. This is the short interest here that I'm showing you. There's 35%. You see that? Okay. That means 35% of the stock is being shorted. All right. So here's the problem. People were shorting this thing and shorting it and shorting it and shorting it, and there was no love. And then all of a sudden, there was a short squeeze, and it happened. And then, so what do I expect for this stock? Well, here's the thing. I expect it to go down. I expect it to go down. So, because I think that what's happened is it went up, their short squeeze was covered, boom, it's probably moving down. So would I buy this thing? Not in your life. Yeah, 66%. Okay, it's not bad, but this is a relatively thin stock at $10.12. It really doesn't. It's really, this is the first time it's traded above 10. Okay, it's only really traded above 10 for a week. So I think you got to be careful with this one. I do think this may adjust, but you never know. But it looks as if that there is a short squeeze on this one. So would I buy this one? No, but I would watch list it. Because if it shows some more strength and it has a base pattern, then maybe you could do that. But that's an interesting stock. All right, so let's look at AMD. This will probably be the last one for today, unfortunately. I'd love to go on for hours and hours, and I definitely have the questions for it. Let's look at AMD on the daily. Pull that up. here for AMD. Yeah, and look at this. Yeah, it's sort of kind of in a funk. On the daily chart, it's up $1.34. Earnings are in one day. You know what? I would be very careful with this one. Let's wait until it goes through earnings. This is definitely a watch list stock. This is a good stock, but there's several things here that I don't like, so I wouldn't be a buyer at this point. One of the things is this relative strength is not very good. So, well, it's not great. It's 75 is, I want to see 80 or better on that. The checklist 8 out of 9, so that's very good. The ownership is increasing, and that's very good. And it does have, it's 79 out of 197 in terms of the ranks, in terms of the sector rank. So that's pretty good. Here's the thing. It's not time to buy it. Wait for earnings, see what happens. I do think that it probably will pull back. But if it pulls back and then it starts moving above, if it pulls back and it moves above about 99.23, that's where you could definitely possibly start accumulating a position, because this is a quality stock, but I want to see it go through earnings before anything goes on there. So that's my take on it. Well, thank you everybody for taking time out of your schedule to take a look. I'm on every day at 2:30, from 2:30 to 3 every market day. I'm on, and so if you I would very much appreciate it if you could possibly subscribe to me on YouTube. It helps me defer some of the costs. It's totally free. And also, I have the action trade alerts, and we're going to be sending that out probably tonight with the play on Palantir, which I still believe is possible. I still think it's possible. The action trade alerts are super easy to get them. Just go to www.DallasTradingFloor. And then sign up is free and all that good stuff. So I hope to see you tomorrow back at the same time.